everyone, welcome back to Flexify 2, your Job Search Evolve podcast. Today we're going to talk about something that ties directly to our livelihood, but will probably make your financial advisor want to fight me. Look, I'm going to be straight with you. I've been in this money game for years, and I'm sick of watching good people get financially screwed by systems that are designed to keep them broke. Let me share something with you. Last month, I talked to a good friend of mine who's a program manager. Great person, works at a solid company. She's been bragging about her 401k match. Free money, she says. My company gives me 4% automatically. No, they don't. That free money, it was calculated into your total compensation before you even signed your offer letter. They're not doing you a favor. They're running a retention strategy. So today we're going to break down exactly how these financial systems work, and I mean really work. Not the glossy brochure version, the real deal. We're going to talk about why your 401k is basically a financial handcuff, how high-yield savings accounts are basically banks playing you, and the secret weapon that most people don't know about, the rollover IRA. But first, I must tell you, I am not a financial advisor, but I'm going to give you some information that will blow your mind about how banks actually work. Banking 101, the money flow. When you deposit money in a bank, here's what actually happens. Your $1,000 doesn't just sit there. Banks use your money to make loans. They charge the borrower 7 to 8% interest. They pay you maybe 0.1 to 3%, and the difference, pure profit. So why do banks create high-yield savings accounts, and what are they really? It attracts deposits. They need your money to make loans. More deposits equal more lending power. More lending equals more bank profits. It's also a competitive strategy. Banks compete for your cash. Slightly higher interest rates draw consumers, but they're still making massive margins. The only reason banks can offer 3, 4, or even 5% on your money right now is because they are taking your money and buying T-bills, keeping a few basis points and giving you what's left. This is important for everyone to understand that is listening today. At the point the Fed cuts interest rates, T-bills and bonds will begin to fall. As their yields fall, that's less and less that banks are going to pay you. It's important because you, the saver, can be caught off guard by this. When you see your high-yield savings that has been fantastic for the last 18 months go from 5, 4, or 3%, go down to those extremely low rates again of 1 or 0.5% in 6, 12, or 18 months, it will be because the Fed has cut rates. I don't want you to be surprised. I want you to be prepared, especially if you are dependent on the extra interest. The current Federal Reserve rate is 5.25 to 5.5%. When rates drop, your 2.5% account might become 1%. Banks win and you lose. Let me share a personal story with you. I remember sitting surrounded by statements, spreadsheets, thinking, holy crap, they're not helping me, they're helping themselves. Let's dive a little bit deeper. 401ks. Everybody thinks they're this amazing deal. You are tucking away money, but let's talk about the drawbacks. The main drawbacks of a 401k is that there are limited investment options. Hidden fees eating at 1 to 2% of your returns annually, restricted trading capabilities, an average annual return of 5 to 7%, and they're designed to keep you financially sedated. Let's talk about some of your actual options. We're going to start with the brokerage account. Total financial flexibility, no contribution limits, and it's taxed differently as ordinary income, but more control. You can withdraw anytime without penalties, and your potential average return is between 8 and 12%. Now, let's compare this to a Roth IRA. It's tax-free growth, more investment flexibility. You have an annual contribution limit that is increased every year by the federal government, and your withdrawals in retirement, completely tax-free. Roth IRAs are your forever money that will allow you to retire gracefully and with dignity. You have more investment options than a 401k, and your potential average return is between 7 and 10%. Here's what most people don't understand, and I mean really don't understand. A rollover IRA is like a financial get-out-of-jail-free card. You can transfer 401k funds without tax penalties, gain complete investment control, escape those restrictive employer plans, and consolidate multiple retirement accounts. And if you change jobs, you can roll the money into the new employer 401k plan only if you choose to do so. But nobody talks about this. You know why? Because confused consumers are profitable consumers. Your money is a weapon. The question is, are you wielding it, or are you being disarmed? This week, I want you to do something. Pull out your 401k statements, calculate your real returns, and compare them against what a Roth IRA could do. Here's a strategic money move. Grab that employer 401k match, max out a Roth IRA, dump extra into a brokerage account, and understand how banks are using your money. Perform a search and find out if you have any old 401ks that you've forgotten about. And make sure that you have a beneficiary designated on any investment account that allows it. Look, I'm not here to sell you anything. I'm here to give you the information I wish someone had given me 10 years ago. Money isn't complicated. The systems around it, they're designated to be. That wraps up our deep dive into smart money moves. From high-yield savings accounts, putting your cash to work, to the tax-saving magic of Roth IRAs, and the power of rollover IRAs, keeping your retirement dreams alive. Remember, building wealth isn't just about playing it safe. It's about making informed, strategic moves that others might miss. This is Flexify 2, your Job Search Evolve podcast. Keep asking questions, keep challenging the status quo, and most importantly, keep growing your money in ways that make sense for you. Your future self will thank you for the financial moves you're making today. This is Trina, reminding you to stay smart, stay hungry, and above all, stay dangerous.